Welcome to Atcons, the easiest way to explore your journey of investing in stock market. Execution of trade. The automated trading systems at the stock exchanges, the Bombay Stock Exchange, the National Stock Exchange, etc., assign a unique order code number to each transaction, which the broker gives the investor. Once the order is executed, shares bought or sold at a specific price, this order code number is printed on the contract note. Investors can either place a trade at the market price, the current trading price, which is shown on the trading terminal of the broker at the exchange, or a limit order, a specific price band or level decided by the investor at which the shares should be bought or sold. Brokerage charged. While executing the transaction at the stock exchange, the broker charges a brokerage fee based on the transaction. Most brokers charge between 0.5% and 1% of the total value of the transaction. For sub-brokers, the SEBI stipulates that the sub-broker cannot charge from his clients a commission more than 1% of the value mentioned in the respective purchase or sale note. He may also charge penalties arising out of specific default on behalf of the client, the investor, and service tax as stipulated. Documents you receive from the broker on execution of the transaction. If dealing with the broker, it is mandatory for him to issue to you a contract note within a stipulated period of time. If dealing with a sub-broker, he will issue a purchase or sale note confirmation memo to you. These documents ensure a contractual obligation for both parties and hence must be insisted upon. These documents also provide for the recourse before an arbitrator for settlement of disputes arising out of a transaction. The contract note. It will contain the name, address, and the SEBI registration number of the member broker, contract number, date and settlement number. It will also include the client code, order code, all details of the trade, shares bought or sold, quantity, price and time of trade, brokerage charged, service tax rates, and authorized signatures. The sub-broker's purchase or sale note includes name, SEBI registration number of sub-broker, corresponding contract note issued by the broker for relevant trade number along with the date of contract. Purchase obligations or sale of shares. Investors should ensure delivery of securities or payment of money to the broker immediately upon getting the contract note for sale or purchase, and in any case before the prescribed pay-in day. While purchasing shares, the check or draft payment is required to be made prior to the pay-in date for the relevant settlement. In case of sale of shares, the delivery of shares has to be done prior to the pay-in date for the relevant settlement. What happens if you do not get your money or shares on the due date? In case a broker fails to deliver the timely and proper payment of money or shares, or you have a complaint against the stockbroker's conduct, you can file a complaint with the respective stock exchange. The exchange is required to resolve all the complaints. To resolve the dispute, the complainant can also resort to arbitration as provided on the reverse of contract note or purchase or sale note. While selling DEMAT shares. You sell your DEMAT securities through the broker at a stock exchanges, which is linked to a depository. You must have instructions to your DP to debit of your depository account and credit of your broker's clearing member account at least 24 hours prior to the pay-in date. This should be done so that your broker's clearing account is credited at the time arranged with him. On the pay-in day, your broker gives instruction to his DP for delivery to the clearing corporation or house of the relevant stock exchange. The broker receives payment from the clearing corporation or house. Following this, you receive payment from the broker for the sale. While buying DEMAT shares, you purchase securities through a broker at any of the stock exchanges connected to the depository and make payment to your broker. The broker arranges payment to clearing corporation or clearing house of the stock exchange. The broker receives credit in his clearing account with his DP on the payout day. He can immediately transfer these securities to your depository account, provided your account is already active. The broker gives instruction to his DP to debit his clearing account and credit your depository account. To get quicker delivery of shares into your account, investors or clients can get direct delivery of shares in their beneficiary accounts. To ensure this, you have to give details of your beneficiary account and the DP identity of your depository participant to your broker. Give him instructions for delivery in to your depository participant to accept shares in your beneficiary account. Given these details, the clearing corporation or house will send payout instructions to the depository so that you receive payout of securities directly into the beneficiary account. The following details will have to be given: details of the pool account of the broker to which the shares are to be transferred, and details of the script and quantity involved. I hope you liked the video. See you in the next video. Keep practicing, keep learning, keep growing.